Okay, so the meeting came and went. No deal. Reuters reported the following. Brussels, Berlin. The Eurozone finance ministers Monday rejected it as insufficient an offer made by private bondholders to help restructure Greece's debt, sending negotiators back to the drawing board and raising the threat of Greek default. At a meeting in Brussels, ministers said they could not accept bondholders' demands for a coupon of 4% on new, longer-dated bonds that are expected to be issued in exchange for their existing Greek holdings. Bank and other private institutions represented by the Institute of International Finance, or the IIF, say a 4.0% coupon is the least they can accept if they are going to write down the nominal value of the debt they hold by 50%. Greece says it is not prepared to pay a coupon of more than 3.5%, and Eurozone finance ministers effectively backed the Greek government's position on Monday's meeting, a position that the International Monetary Fund also supports. The disagreement increases the risk that it will prove impossible to strike a voluntary restructuring deal between Greece's creditors and the Greek government, an outcome that would have severe repercussions for financial markets, like if it hasn't happened already. Negotiations over what's called private sector involvement, or PSI, have been going on for nearly 7 months without a concrete breakthrough. Failure to reach a deal by March, when Athens must repay 40.5 billion euros of maturing debt, could result in a disorderly default. And of course, that makes sense, because then you're really going to see lots of people out in the street, lots of protests, lots of garbage burning or rubber burning, because it's just going to put Greece's economy further and further into the hole. Despite the disagreement of Olli Rehn, the European Commissioner in charge of economic and monetary affairs, said he expected a deal on PSI to be struck within days. That's a code for we get what we want whenever we want it. That's what that's really saying. Eurozone leaders agreed in October that the second bailout would total 130 billion euros if private bondholders forgave half of what Greece owes them in nominal terms. Now, do you really think that's going to happen? But Greek economic prospects have deteriorated since then, which means either Eurozone governments or investors will have to contribute more than they thought. Because whenever you devaluate something and you have to bail out, that doesn't give a good prospect for the future. Okay? That means that you are already weak and you're being bailed out. You need recuperating time to get it together. In the meantime, the Greek markets are going to suffer within that gray period of recuperation time, provided that it can then get itself out and not fall into a situation where it needs another bailout. And that's what's happening. It's almost like a hamster inside of a wheel going in circles. The whole thing sounds bullish, doesn't it? Trade well. And remember, follow the trend, not the so-called experts. This is another quote by Lavine, which is on the money.